Peter Rose, Longwood Currency Trading. I got my coffee. Got a fire going on the wood stove because it's really chilly and cold and rainy. It's mid-March of 2022. I wanted to thank everyone who's recently been sending me some emails that contact me and had some questions or just make some comments instead of just on the videos themselves. Thank you. One of the things that I'm seeing there's some confusion over in my presentations is that I'm tending to skip between, I'm a day trader and I do some scalping every now and then, but I also get into some longer term trades. I'm not a swing trader, but I do get involved in some longer term trades. So there's some confusion as to exactly what we're trying to do here. I get involved in the longer term trades when the momentum appears that price is setting up to go for a longer distance. And what happens at that point is that I expand my normal profit target area to maybe 3 or 4 times that. And then I'll ride with that trade. A lot of the times, most of the times, I have to be willing to withstand price pullbacks, sometimes significant price pullbacks, before it turns around and goes in my direction. Now that can get kind of deadly because you could go through 30 or 40% of your account real easily, if you're not careful. So I don't advocate that. I mean, that's just what I do, and I'm not an advocate of me even doing that. That's a throwback to 40 years of real estate investment and the risk management and stuff that you do in real estate. Again, when you are in real estate, you have to be willing to do it for the long term. You could be a scalper. I mean, they call them flippers. But you have to have a lot of cash. You have to be able to turn that. And if the market goes against you, you end up with 2 or 3 flips and having to rent them for below the carry cost of your money, and your money gets tied up, and you generally have partners and things. It just wasn't something that I wanted to do. And so I would hold properties for 20 years, 30 years. And so in doing that, that was my retirement. I knew that's what that was going to lead to. And then add to that anything that I would make in salary and savings and that sort of stuff along the way. Again, this is all being planned out at 24 years of age. I'm 72 now. So at that young age, I knew that I had time that if things went badly, which I knew they would, I wasn't leveraged badly, and I knew that there could be significant equity losses along the way. But because I had the base protected, I was never leveraged more than about 40% on my debt on these properties. Very shortly after I would buy them, because I was always buying them. I had good entry skills in real estate, and so not only was the market favorable for me, but I also knew how to get in there and in very short order increase the cash flow of the building, which then increases the ultimate value of the building. And sometimes I could work in both directions on something like that, and walk into a building and have a $40,000 or $50,000 equity in the building within the first 6 or 8 months of managing the thing, because I'm taking over from weak hands to strong hands. And so you do that for 40 years, and that carries over into the currency market. I've lost $1 million twice in my life due to economic collapse, and that was equity, net worth in the real estate market. You just can't panic and sell, so you hold, and I made those $1 million losses back each time. But I had time. I had the 30 or 40 year career that you can do that in. Many of you are starting in the currency markets, and you are young, and so you do have the time to lose your money and make it back. And if you're under the correct guidance, I can work with you on that. The problem comes with the older folks who really can't take significant losses because they don't have the time to make that money back. It does take time to develop skill in the currency markets, and so you have to approach training somebody who's older differently than you approach how you would train someone who's younger. I don't see anybody out there making that distinction because the easy money is with the poor young people who are looking for somebody to say, oh, look, I took $1,000 and turned it to $50,000 or whatever you do. I took $500 and turned it to $3,000 or $4,000. Are those things possible? Sure, they're possible. Can you do that as a newbie trader? Well, probably not as a newbie trader, but if you have a really good system and you can climb on board the wagon at the right time, you could make an enormous amount of money, and not in a long period of time either. Is that the norm? No, of course it's not the norm. The statistics are that you're going to start trading, 90% of you are going to fail. What does failure mean? It means you lose all your money and you walk. So it's important when you're looking at your expectation for gain that you be realistic. So all of my videos, I talk about really realistic gains on a yearly basis, because that's what you do. You may be trading on a scalping basis, but what are you going to do? You're just going to trade for 2 or 3 days? No, you're going to trade for a year, 2 years, 10 years, whatever it is that you're going to do. So you look at your percentage gain on the amount of money that you have at risk. If you have a $10,000 account, then you divide your win by $10,000. If you have a $400,000 account, but you only trade 10,000 of it, that gain is based on the win divided by the $10,000. You wouldn't divide that win by the $400,000 because you didn't use $390,000 of it. It doesn't make any sense. It's the same as with real estate. I held multiple buildings during my lifetime, and when I would sell one, am I dividing the profit of that building by the total asset in my portfolio? No. I want to know what I did on that building. If I'm positive, then I know I did the right thing. If I'm negative, I did something wrong. I learn. You have to be very careful about how you're setting your mind up and your trading plan up in order to do these trades, right? So when you're looking at my videos, please take in context some of the things that I say. I'm trying to set the stage for a person to be successful under the most simple conditions, rules possible, to get you with the right habits. I'm not trying to get you to take a $1,000 account and turn it into a $10,000 account. I'm trying to get you to the point where you could take a $1,000 account and make $200 a year on that $1,000 account. That's a 20% return. You're not going to get 20% anywhere. But if you're reasonable and you're careful and you have pretty good rules and you're just getting started, then $200 on 1,000 is pretty good trading. And if you can be consistent doing that, then I think you'll find that percentage gain, that 20% could go to 40% or 60% a year or whatever. So think about that. You develop your skills and you have a $1,000 account and you get an 80% return over the year, right? Pay your taxes, now you got $1,500 or something that you can trade. Okay, great. Now you make 80% the next year. And so you're compounding that account. You're not compounding on a monthly basis because you don't have the skill for that. Do it on a yearly basis. But what I'm trying to do is teach trading so that when you go to look at the chart and you're trying to make your decisions in your entry analysis, that you're not doing it based on fucking conditions of a Bollinger Band or some indicator, because that's not trading. That's listening to what someone else is saying should happen. Oh, if this moving average does blah, I'm going to do that. If this RSI is reading this and this is happening, then I'm going to do that. Those are not as quantitative structures as you might think. There are folks out there that are very quantitative about, oh, if this RSI is here and this happens, that's the rule, and I enter. That's not what they're doing. Those things are confirmations. They're using those things as confirmations for how they trade. And because they can't teach principles, they teach stuff based on other stuff. I don't do that. I teach principles. I trade by principles. And so when you watch my videos, you have to look at the principle behind what I'm trying to accomplish. 90% of the time, I'm talking to the person who's just kind of getting started and needs a jump start on that. And so we're trying to trim everything away from all of this complexity and hubbub that's going on out there and present a simple playing field for you with simple tools. And once you get familiar with the playing field, you can increase the tools. And then your principles can change, and you'll find that your rules then change to match your personality, the time frames that you're trading on, the amount of money that you have in your bank, the amount of money that you might have access to quickly to add to your bank, your overall yearly expectation of what you would need to trade in order to make the trading effort worth your while. All those sorts of things that are important to us to know so that we can carefully then manage our expectations with the current bank size that we have and the time frame that we're trading on. You know, if you're trading on a 5-minute chart, I say, I'm going to set on I've got a 5-minute ATR on a 5-minute chart. That's usually what I try to find. And under those conditions, I'm going to set a very short stop, an 8-pip stop. I call it an 8-pip stop, but sometimes I'll go to 10. Sometimes I'll go to 12. But with that experience, I'm able to do that because my win-to-loss ratio is better, that I can absorb a 12 pip loss or even a 20 pip loss. But as a starting point, it's 8 pips, that's it. And you may lose 6 or 8 times in a row. But you're not losing because the stop is short. You're losing because you don't understand trade entry theory. You have to be able to distinguish what you're doing, and there's nobody out there that's sharing this stuff with you. It's unfortunate, and I'm not available to everybody to work with on a mentoring basis because I'm very careful about the time that I'm spending with other people, because most people only want the secret sauce answer. They really don't want to go through the process of learning principle-based trading. They only want a couple of magic rules, and then they think they're going to go off and take that $1,000 account to $10,000 and $20,000. So balance what I'm saying. If you agree that you should be learning your trading on principles, then when you watch my videos, watch them for that content of what's the principle? What's he talking about as far as a principle goes? And again, this is the basis of, looking at, I'm going to take an 8-pip loss, and I say, well, it's unlikely that I'll get more than 15 pips, and that's in a rare instance on that 5-minute chart, before it starts to turn around. And so my expected win is 8 to 12 pips, somewhere in that range, which you would almost say, well, you got a 1R. But I don't believe in R. I don't believe in risk to reward. All that is just horseshit by people who really don't understand the principles of trading. It just happens to turn out that those numbers fall into place. But again, somebody who would tell you that or encourage you to think that way is not teaching you principle-based trading. They're teaching you stuff. And that stuff is interpretive, which means you can interpret it one way, and the other person is interpreting it perhaps another way. So I'm not saying that I'm limiting the win to 8 pips, let's say, as a 1-to-1. Because what's happening is that once I get to the profit target, I move my stop up to break even, and I'm trading for free. If the thing falls back 8 pips and takes me out for a 1 pip gain or whatever it is, well, that's fine. What do you think would have happened if I would have not brought my stop up? The thing would have gone up 8 pips, and then it would have come down to 0, and it would have gone back to 5, and then it would have gone down, and I would have lost 8 pips. But because there's experience there, and I have a good win-to-loss ratio, I'm doing all those trades, and a break-even is a win, because I didn't lose. So what you're doing as a day trader, and particularly as a scalper, is that you're probing the market. What you're doing is you're looking for that runner. And a runner is price that has higher momentum. The momentum is increasing. Now, there's a lot of people that rely on Bollinger Bands to tell them about this momentum. I don't believe in Bollinger Bands. I believe in looking at the price action and determining from an instinctive standpoint whether you feel that price has the momentum to do whatever it's going to do. Because remember, the Bollinger Bands are based on moving averages, which are time delayed. I don't want to sit there for 5 hours trading. I want to be able to go into these trades and say, boom, I'm in and out. And with a win-to-loss ratio of 70%, 60%, you can do that. It's just that you can't take big losses. And that when the thing goes into profit, lock it to break even, because the retracement is going to always happen. You can always get back in. If you were taking that trade and it goes up 8 pips and you bring that stop up to break even and it comes back down and takes you out, that's not a bad thing. Let it do it, and then it'll turn around and go back up, and you get back in when it goes back to the point where your profit target was. That's where you get re-enter. Because now you feel that with that bounce, it has the momentum to go beyond that 8 pips. So now when you're in there, maybe you'll get that 15, maybe you'll get that 20 pips, maybe you'll get 30 out of it. I don't know. But what I'm not saying is that I'm hard locking my profit target the same way that I hard lock my stop. I don't. I hard lock my stop, but if that profit is going to go, not only am I going to let it run, but I may, if I've seen the momentum conditions right, I may go in enter with multiple lots, peel some of those lots off, whether they're minis or fulls, peel some of those off at profit target 1, bring the stop to break even, let the other ones run. As soon as they've run a little bit more, I'll back the truck up and load the whole account onto it and let her go and bring the stop up to break even on those. I'm trading for free. I've made the money that I peeled off at the beginning, and I let the other things run. And sometimes they'll run 20, 30 pips. And I've got my whole load on there. And so I'll make a lot of money. So don't try to do that kind of thing until you've got a good win-to-loss ratio, which implies consistency in your trading over trades where you know what you're doing. It's very difficult to do this without guidance, because how do you know when you've done enough trades to have a consistent win-to-loss ratio? What metrics do you use to determine how that's all coming out? So, and those are questions that I'm getting through emails. I try to help folks kind of wiggle their way through that. But unfortunately, most of the time, the questions become so complex that we go to a student questionnaire form, person sends me this form, and I go through it, and you know the answers are: have you traded before? Have you traded a real account? What's your risk tolerance experience? And all those kinds of things. About 18 questions, and I'll write down the commonality that I see, and then I'll write comments to that, and we'll get together. We'll do a little video chat for half an hour or an hour, and I'll try to help you out with the specifics of your immediate issues. If you want to ask more questions beyond that, I'd be happy to communicate with you on a minimal basis, but I can't help you really on a minimal basis. I will give you the tools so that if you are visual in your learning ability and you are understanding what a principle is as opposed to stuff, you could probably take all that and do fine. But if you're struggling and having problems, well, then you're going to have to take a course, or you're going to have to take some consulting, and it's expensive. It's really expensive. You know, you're not going to go to Harvard for 10 grand a year. You can go to your local college for 10 grand, but you're not going to go to Harvard. Well, what kind of education do you want? The one for 10 grand is fine. It's great. The one for Harvard is probably a little bit better education, but because of the extra work that is expected of you, and your performance will open more doors for you than the community college would be able to do, right? I mean, that's all just the way that it is. You can drive a Subaru Impreza down to the grocery store, and you can drive a Lamborghini down to the grocery store. They'll both get you to the grocery store. Maybe you'd be feeling better about driving the Lamborghini, but it isn't going to get you to the store any quicker. Well, maybe it would get you there quicker, and you can pay your speeding ticket along the way, okay? So, when we're looking at these conditions of trading that I'm discussing, please remember they're principle based, and that I'm not cutting my profits at 8 pips or 10 pips or whatever to match some reward to risk ratio that's non-existent. What I'm looking to do, I'm probing, and I'm taking losses, small losses, and I'm taking break-evens, and then all of a sudden things will start to change and the price will go in one direction, boom, back to truck up, and away we go. And then I'm done for the day. And I'm hopeful that I can do that within about a 2-hour window. A lot of the times, as I've said on some of the videos, I'll step up, oh yeah, this looks like it's going to break in any moment. I sit there and watch it, boom, I go in, 15 minutes later I'm done. I'm done for the day. Because I've got my 15 or 20 pips, or my 8 pips. Or maybe I got 3 and the conditions have changed and I'm out of there. Or maybe I stupidly hung in there and took a 30 or 40 pip dump. And now it's going to take me a couple of days to make that back. But the difference is I know I can make it back. Can you make it back? So you don't want to look ahead and see what somebody else is doing and try to duplicate that, because you won't be able to duplicate it without having your own set of principles. And that's what I'm trying to help you with on this YouTube channel, is to look at trading as principle-based, not as stuff-based, okay? Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.